What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It is August 18th of 2022. We have one more day until options expiration, team. Let's start off with our box scores. We're going to go through every dirty detail of today's price action. S&P 500 finished up 0.29% for the session. Our NASDAQ QQQ finished up 0.24%. Our IWM small caps finished up 0.66%. Our dogs of the Dow were up 0.11%, and our ARK Innovation ETF just could not catch a bid today, down 1.1%. We did have a volatility crush across the board. The Dow Jones Volatility Index, I don't think it's actually up 14.31%. Every now and again, it just does something like really weird, where it just shows that big vol spike. But I would imagine it looks pretty similar to these other indices where the volatility did come out. To be honest, this looks like everyone that had protection on the books is effectively giving up, biting the bullet, floating to the surface, their body. I don't know how else to put it, but they're essentially like, they're toast. Breadth was positive. We had 63% advancers in the small caps, and we had up volume of 57.1%. Our trend model remains at a +1. Finviz heat map. Look at the action. So was this like beautiful bullish action? Not really. We had energy, which was one of the leading areas of the market. My only long position right now is in Occidental Petroleum. We are riding on the coattails of Papa Warren Buffett. But then we also had some very nice strength in the semiconductors, which is a bit more bullish. Semiconductors, that is a nice leading group, which is pretty good. And some very nice moves in that category. Apple finally had the slightest bit of a pullback, but literally just like a baby move to the downside. And to be honest, today was really just a very choppy day. And on days like today, so I'm going to drop a gem on you, which is something that it took me a long time to learn in trading, especially when I went full time. When I was part-time and I was still working at Vanguard, this was very easy. It became much more difficult full time. So on days when the market's just chopping around, and it's like, all right, we got OPEX coming up, the market's likely to pin and just not do a whole lot. On choppy days like that, I notice most traders, and this used to be me as well, it tends to be a very uneasy period where it's like, oh my gosh, what's the market going to do? It's going to go up or down. Like, I entered this trade on the long side, it pulled back on me. I entered this on the short side, it advanced on me, like I'm getting all jumbled up. And it becomes like very difficult and very stressful. And what I've, come to learn over the years is like, these can actually be the best days, because when the market's just kind of choppy, it's literally the market giving you a green light to look at your screens less. The market's giving you a green light to take a long lunch. The market's giving you a green light to call that person you haven't spoken with in a while. The market's giving you a green light to hit the gym. All those things. That's the best thing about being in the market, that it is not a 9-to-5 job. You get paid to perform. You do not get paid to sit at the desk. If somebody can perform looking at the desk for 30 minutes a day, they can have a much more viable, vibrant career than someone that's sitting at the desk for 10 hours a day if they're making better decisions. So never feel like you have to be sitting at the desk. Our sectors. We have the solar energy stocks. They put on a pretty good performance of 1.2%, but not quite as good as dirty energy, up 2.69%. We can see that we have three leading momentum groups: XRT, retail, consumer discretionary, and capital markets. And that composition of leaders has changed, right? When we were in the real big like accumulation phase of the rally, what was advancing? It was like solar stocks. They were leading the list. We had blockchain stocks leading the list, like these very risk on areas. Biotech leading the list. Are any of those leading the list right now? No. They've all moved to the middle of the pack, bottom of the pack, etc., etc. And then, of course, the semiconductors had a very good performance as well. Style factors. We had the high beta style factor up 0.52%. We also had the momentum style factor up 0.68%. And yeah, pretty good performances for those style factors. Let's take a look at the overall markets. There are a few things I want to hit on. I wrote them down on this handy dandy index card for you guys. So let's check it out. S&P 500 trading up 0.27%. And now it depends on what time frame you're operating on, right? So if you are a day trader, I notice most people, like, I attend like Twitter and Twitter Spaces now, and I notice most people, like, sad to say, they have like the memory of like a goldfish, and it's just recency bias everywhere. And recency bias is basically like whatever just happened, you just expect that it's going to keep happening. I notice that's like the biggest issue that I see with traders. So for example, if you are just a day trader, you're going to look at this plus 0.27% and go, oh my gosh, this is so bullish. Like, this is great. Like, I'm bullish now, whatever. But if you're looking at where we were just a few sessions ago, I mean, the market's trading lower. If we compare this to yesterday's candle, we really just put in an inside day. We tested very close to yesterday's low of the day, but did we test close to the high of the day? Not really. So this to me still looks like, despite the fact that we finished up 0.27%, it looks like we could be at the very beginning stages of a pullback in the market. We're also beginning to hug this 5-day EMA. First you start hugging it, and then you end up breaking below it, and then that opens up these other levels. So that's really what I am looking for into next week. I do think that the market's going to lose some steam, and that's what I'm positioned for as well. I would never tell you guys something and not be positioned that way. And I'm always honest about how I'm positioned, and I'm wrong just as much as anyone else. I was taking a look at my win rate in TraderSync, which is where I journal my trades. Right now my win rate for this year is actually like very good. This is the best win rate I've ever had. It's 61%. Usually my win rate is somewhere between like usually somewhere between like 45 and 50%. It's usually somewhere in that range. So this is pretty good, but yeah, I'm wrong about 40% of the time, so you never know. This could certainly be a time where I am wrong, but I think this is a pretty juicy setup on the short side. Russell 2000, same deal here, right? Yesterday was a horrible day for the Russell. First big red candle we've seen since this one right over here in August. Now today you might say, wow, Russell's up 0.56%. You know, we're right back to being bullish. But the Russell 2000 was not able to reclaim the 200-day simple moving average. So I really think, like, you know, maybe you're not like me where you're actually shorting the market, but I think at the very least, this should give, you know, a trader like some pause, like, hey, let me not be like super aggressive. I think there's so many different ways of actually trading that. For example, let's see, I think we did make it above this weekly value area high. Yeah, you can see we're back above this weekly value area, which is pretty good. Definitely worth watching that 1997 spot 5 level. And then what do we have here? Let me try to go through the rest pretty quick. I don't want to keep you for too long. NASDAQ, you can see also finished up a smidge. And our dogs of the Dow, they were also up. But what's super important, stick around for this. This is the real nuance to today's action. My girlfriend's actually, I hear her opening the door. We're actually going to go to happy hour in a couple minutes. But let me get this out for you. So the dollar index. This is key, team. The dollar index. When this thing starts advancing to the upside, that tends to be a headwind for stocks, and especially international stocks as well. But this shows that financial conditions are tightening. Remember, you know, this recent rally that we've had, it's off the back of a dollar index that is starting to fall. Now we're kind of breaking out of that, you know, bearish pattern, and we're kind of moving to the upside. Now the dollar index, all it would take is one more candle, just like the one we got today, and suddenly the dollar index is trading right at the highs. So that is something. Have the narrative machines picked this up yet, the stronger dollar? No, they haven't, but that is worth watching. And again, like, if I can envision a scenario in my mind that's much better to trade my bullish setups, why would I trade my bullish setups right now? There's no point. Why don't I wait for that perfect scenario to pop up? That's kind of how I see it. Yeah, dollar index is very strong. And then if we look at crude oil, remember the main reason why the inflation print came out so good was because crude oil took a big spill to the downside. Crude oil held the this Venom S1 pivot down here, and we closed above the 5-day EMA. We closed right on that 10 EMA, and we're getting pretty close to $90 a barrel for crude oil. And this is definitely something to monitor. Though the one long position that we currently have on is Occidental Petroleum. Again, this is Warren Buffett's name. But even though crude broke down, now these oil stocks, they are actually not breaking down. This is still trading above value. And the long setup actually looks pretty decent for a few of these. I believe there's a few members of our trading group that are long EQNR. And by the way, I did get some messages about potentially joining the trading group from a few individuals. Definitely always feel free to reach out if you're interested in joining Pristine Capital. You know, I can always send you like a discount code for your first month, anything like that. In fact, I'll actually put one in the description link to this video where you can get your first month. You can try out the trading group for $30 rather than the $99.99 that it actually costs for the monthly subscription. The one thing I do ask, if you join the group, you know, right now we have a very nice group of individuals. Everyone is trying to get better. Me as the head of the group, I want to make sure that we keep that culture where everyone is interested in helping each other. Everyone's interested in sharing what they know and their knowledge. And it's not really like a group of everyone just like, you know, congratulating themselves for winners and stuff like that. Like, it's a group of people that want to get to the next level. So if that, you know, if that describes you, then you would be a perfect fit. So go ahead to pristinecapital.net. I'm going to post that discount code for your first month in the description of this video. EQNR, this one is also setting up pretty nicely. But then here's the other nuance that I'm seeing. So we talked about crude, we talked about the dollar index, treasuries. Treasuries, this was another big component of the rally the market had off of the lows. You can see we put in a bottom, it looks like June 14th. And look at where the S&P 500 bottomed out. It was right around this June 14th. You can see we hit the absolute bottom, looks like on June 16th. So those two things coincided, right? But now treasuries, they are actually not looking so hot anymore. And treasuries, we did get a bounce today, right? Off of this monthly point of control. But we lost a lot of the gains and we only finished up 0.05%. So again, this is another trend where I want to be cognizant. If we break below this monthly point of control, that's certainly not a good thing. And I think that could have some ramifications for equities as well. So those are really like the main things that are on my radar, main risk factors. And then what else do we got going on here? Also, the meme stocks are starting to die. We talked about this the other day. The meme stock rallies, they typically happen towards the tail end of a rally, not at the beginning of the rally, right? So this is Bed Bath & Beyond. We did get a headline after the bell. The CEO sold his entire position. And the stock is trading down now at $11.90. The other day it was at $30, I believe. Yeah, so anyone that chased this thing a little bit too late, they absolutely got punished. That's exactly what we've been talking about. So yeah, take a look. This is what I traded for today. Let's just end off here. So no common stock trades for me today. And let's go through some of the other trades via options. So for options, I closed out another 25% of the Hut 8 Mining September 16th 3.5 strike puts for 80 cents. Then I closed out the final 25% for 88 cents. And let's take a look. I also closed out my AMC position. Closed out half of it for $5.90. I had paid $4.90. Then the remaining half for $6.30. Let's take a look at both of these stocks. And we're noticing the lower quality names, they're starting to really lose steam. Like Hut 8 Mining. We rode this stock. We played this entire breakout. We were piecing out of the position. We sold the remainder of our position right on this green candle up here, which is good. And then we bought put options on the stock. And this one really looks like it's just having an ugly breakdown. Same thing for AMC. This was a meme stock. And it finished down almost 10% today. Pulled back to the 20-day simple moving average. Could we end up hitting this monthly value area high? Certainly. But for me, after getting some nice glorious red candles, I always try to make sure I don't optimize for selling the bottom. I optimize just for getting a decent profit and nailing that down. So yeah, both of those not looking so hot. And then the only position that I added was I added to my SPY September 16th 428 puts for $8.80. And yeah, that's just more of this thesis that we're seeing, and that it looks like it's starting to play out. Tomorrow is options expiration. I'm, assuming maybe there's like a pump into lunch or whatever related to expiration. But honestly, I'm really looking for some weakness to begin at some point next week. We'll see what happens. As always, this isn't financial advice. Don't go out and YOLO your entire account to put options or anything like that. You got to do your own due diligence, but I just want to be transparent with you as to my thoughts on the market at this current juncture. With that being said, that about does it for this market recap video. Enjoy the rest of your evening.